Welcome to the Executive Innovation Show podcast, where we bring you real executive conversations with industry game changers and thought leaders. We ask the questions you're thinking, what you're scared to ask, and we make your brain hurt afterward. With your host, Carrie Chitsey Wells, co-founder and CEO of One Touch Video Chat, live video interviews, and the nonprofit Humans Helping Humans.
Hello, everybody, and welcome to today's show for the Executive Innovation Show podcast. We have a great show today. Got some amazing ladies here. We're going to be talking about venture capital and will the 2% female investment ever change? Brought to you by One Touch Video Chat, live video interviews, and One Touch Telehealth. I've got three amazing ladies on the show that are changing things in venture, family office, angel investing. I'm happy to have them on the show. First with us, we have Nisa, Amolis, who's partner at Grasshopper Capital, a securities lawyer, anchor of the Digital Asset Report, and author of WTF is Happening, Women Tech Founders on the Rise. She's also named Business Insider's 30 Women in Venture Capital Watch in 2018 and Top 100 Women in FinTech in 2019. We got Meg Paulus, who's partner at Holt Ventures. She leads investment activities for Holt Ventures, Holt's family office, and also facilitates the grant making for the Family Foundation. She used to be at BlackRock Private Equity Partners, executing venture capital and capital growth and buyout transactions there. And she began her career as an equity research analyst at Quantum Capital in San Fran. We also have Stacey Feinberg, who is president at 33 Capital and managing director at Golden Seeds. She's an angel investor, a venture capitalist, and shifted her focus to funding and empowering female entrepreneurs. Some of her early stage investments were Uber, Facebook, and Zico Water. Ladies, welcome to the show.
Thank you.
Thank you.
Thank you. Happy to be here.
Awesome. Well, Nisa, I'm going to just direct quote some of the stats from your book because you really opened it up with some great stats. And I think everybody should grab a copy of your book, whether you're a female founder or whether you're a male investor trying to forward the cause here. But women CEOs represent 17.5% of privately held businesses with paid employees. Of the S&P 1500 companies, that drops to 5.1%. Female founders on the VC side are getting 2% of investment with no male co-founder. That jumps to 13%, if we want to call it jumps, if there's a male co-founder. And then 74% of VC firms don't have women in leadership positions. And of 2018, women made up only 8% investing partners at U.S. VC firms. And then you give some great stats in the book that people should check out just about how women investments are performing better or in the top of the quartile, things like that. And so definitely want to do the stage here. I do want to note that since this podcast is about the female investment side, I don't want to lose sight that there is issues on minority investment as well, which we're going to talk a little bit about later. But I want to go around the table first to everybody and say, given those numbers that I just talked about, what do you think is the biggest kind of contributing factors to this? Is it we don't have enough women in decision-making powers on the VC side in this male-dominated space? Is it that women founders and women CEOs don't know the landscape or who's really investing in female companies? Is it the good old boys club that we always talk about, or is it something else? Meg, let's start with you. Where do you think it's coming from?
Sure. So I guess none of those answers really kind of sum it up to me. I think it's a lot of different things, but one thing is that it's confidence. So women are always waiting until they feel like they have a fully baked product or wait until they feel like they're perfect to either approach a venture capitalist for money or to apply for those types of jobs. And so I think it's not a competence issue, it's a confidence issue. And so I think the more that we can create an environment where women feel safe and that they're able to bring up their ideas and approach and apply for those jobs, the better we can kind of influence this 2%.
What about you, Stacey?
I picked D, all of the above, actually.
Yeah.
I think that it's all of those things. I liken the industry almost to the sports world or the entertainment business, where, 8 books, 8 movies, 8 songs will go bust. One will earn a back its advance, and one will be a huge hit that supplements the others. But the same thing for those that get picked, those that get chosen. So if it's sports, if it's entertainment, the top 1% are really the ones that make it and that get funded. But they're cultivated for many years because these companies are looking for a very similar person, entity, similar with VC. They're looking for somebody with a track record. They're looking for somebody with connections. They're looking for somebody who's like DNA is in that industry.
Right.
They don't want an idea. They don't want a pitch. They don't want to, they want a business with traction. So a lot of women I notice go for money too early, which is a problem. We can address that later. But like Meg said, confidence is certainly one of the issues because I think growing up, a lot of times we're not trained to properly ask for what we need, feel comfortable with the ask, feel comfortable with the no. So I think there is a gender bias, perhaps, even in the way that women ask for things. And also, I think that women are coming a little bit too early, looking too early. And so they're getting rejected early, and then that skews the numbers.
Right. And Nisa, what about you?
So I kind of disagree. And I think that what's being said about the confidence in women has changed over the years. I think women are asking, they are confident. And this is not solely a women's problem for them to remedy. Because even when they do remedy, the numbers don't change. So this is a systemic problem. And it comes from the top and the way the system works from pensions, endowments, sovereign wealth funds for funding venture funds and the power dynamic there and how they don't ask for diversity or they haven't traditionally. They don't want to rock the boat. They don't want to, lose their allocation by asking the questions. And so there's really no incentive for change, even though the data is overwhelming that female founders outperform, which would make a fund outperform, and also female investors outperform. People know about the data. They just have to want to change. And there's really no incentive to change if they're still getting capital without the change. So I think, this bias is just going to persist unless we actually make some structural changes.
Yeah, and it's interesting you bring that up because in doing this series, I talked to a lot of female as well as male venture capitalists, and there's a lot of talk of wanting to change, right? But it doesn't show in the numbers. If you really ask, okay, how many women founded companies have you guys actually invested in this year? It pales in comparison and is in that 2 to 10% or less number. It was very interesting to me that I had, without obviously not disclosing names, but I had very specific conversations with male venture capitalists who said, I will not go on the record talking about female founders on a podcast because of the LPs. Yes, I support women founders, but I will not go on a podcast and publicly talk about investing in females because our LPs aren't there yet. And that was pretty eye-opening to say that if you're not willing to talk about investment in female founders, you're sure as heck not willing to put your neck on the line and back a female founder if something goes south. And so that has been very eye-opening for me, going through this process of how many people will not talk about female investments publicly. So Nisa, back to you. I want to talk about, you have some amazing and eye-opening stats in your book. As you were putting together this research and writing this book, what really was kind of the eye-opening thing for you? Was it some of these numbers, to your point, aren't really moving, or was it more performance of the female versus male-founded companies? If there's a takeaway for people, what did you come out of this book saying, oh, wow, this really has to change, and from that perspective?
So, I had been writing for Forbes for a while, and I knew a lot of this data, and I just wanted to put it all together in one place. And instead of making that moral imperative argument that this is impact and this is the right thing to do, and I wanted to show that this is actually about seeking alpha. And if you look at what's going on in the global macro environment right now, there's very few places where you can still seek alpha. And for people who are not looking at this asset class, which is undervalued and shopped, which over delivers, they're missing out. So It was really economic. Basically, this is arbitrage. And so, I don't understand why more investors aren't looking here, male or female, because just women are starting the businesses at a rate faster than any other demographic. And it's really, I would say, the one eye-opening thing, which I kind of knew, but was that the investors ask female entrepreneurs questions that are preventative, and they ask male entrepreneurs questions that are promotional. So that furthers the funding gap. And it's about, overcoming that habit and recognizing your own bias, and then teaching women how to turn the questions around when they're asked.
Yep. No, that makes a lot of sense. And, I think there was an article that just came out. I think it was I think it was Inc. magazine recently, about the two female co-founders of Away, the luxury suitcases that came from Warby Parker. And of course, they were able to get a lot of meetings just because everybody wants to invest in the next Warby Parker. But they openly, talk about some of those venture meetings and how they were treated as two female co-founders. And everyone has, those stories, right? And there's more often those stories than there are not, right? And so I think, they were very open of, they went in, they got a meeting because of their background. They went in and, the guy had just bought an Apple Watch and was, doing the Apple Watch and asking them questions on how to put it together as if, they were secretaries, right? And so they went down the path and, ended up raising obviously later, and they've raised, huge amounts of money. But, what's your guys' advice for women that have these experiences and keep moving on, right? Because it is very demoralizing. I sit on both sides of it, right? So I see it from both sides and hear all the stories and I talk about it. You can't let it down, because you have amazing stuff going on in your business. You're having all this stuff, you're having all these venture meetings that hitting the chins on a daily basis, right? So what's your guys' advice to get through that? Because one of the things that I want to talk about is really deal flow, right? Because you guys all have deal flow coming in for your investments, but a lot of women don't know where to turn that are really investment companies that are legit writing checks for women, right? Because talking about it and saying that you have that initiative, but not following that up is a lot of wasted time. Just as much as it's wasted time for the venture, it's wasted time for the entrepreneur. And a lot of times, it's, hey, the venture folks are really busy, but, it's a full-time job to raise money to run a company, right? So I think we need to think more about wasting both parties' times if you're really not investing. What's your advice for women to find the right venture, family offices, angel groups that are legitimately investing in women, and then how to kind of navigate through that. Stacey, what's your advice?
I can help you with that. First of all, for the early stage, friends and family, some people call it friends and family and fools.
Angel,
but
yeah.
You got to start off with your credit card, another credit card, a second mortgage, an SBA loan, invoice factoring. I mean, you've got to really go as far as you can to the brink, to the edge before you seek outside money. And I always tell them, try to wait as long as you can. Because yes, VCs are going to ask for traction. They're going to ask to see that you've got some sales. An MVP sometimes doesn't always do it. So there are a lot of angel groups I've discovered, a lot. There's, Tech Coast Angels, there's OSHA Angels. There are a lot of places that you can go to that just focus on female entrepreneurs. There's Golden Seeds, there's Plum Alley Ventures. Now, a lot of them will invest at different stages. So you want to go to the angel groups first, if you don't already have, $1 million in revenue. Then you can go to the other ones if you have some more traction. It astounds me how many places there are today for women to be able to pitch. I could see 20 companies every day, and with a room full of other female angel investors and female VCs. There really isn't a lack of places to go. You just have to know where they go, and you have to be organized and take it seriously and make a game plan. And also, a lot of times I tell the women, when you go out, have a timeline, go out on a road show, take it seriously, really, and then follow up with updates. So if you leave the meeting and they choose not to invest with you, send updates. Let them know that you're still there. Keep yourself on the back burner because maybe it's a little bit too early, but let them know how you're doing, because then all of a sudden they may be ready for you and you might be ready for them. But what I would say is to go to a lot of these different organizations early on, women founded. I call my boardroom the broad room. I mean, I just see women. I do. Deal flow is not a problem for me. And also, there's so many incubators out there that are helping women. So many accelerators.
Yeah.
I think there's a lot of different avenues for female entrepreneurs. You just have to make sure that you see the ones that are appropriate for the timing of your business. Because if you go too early, you're going to get a no. They're not going to invest in a PowerPoint presentation or a great idea. So just be cognizant of where you go when in the life cycle of your business.
Nisa, what are your thoughts?
I agree with that. And I would also just add that there are about 80 gender lens focused funds right now. There's a list. You can add it to the show notes. It's somewhere published, but there are more funds added every day. So even at that later stage. And yeah, I think family offices, if it's not designated women's angel group, I've found that they're pretty indifferent to whether it's a woman or not. Family offices, different view, longer term preservation, and different risk profile. So yeah. But so again, I would just say there's an overwhelming, as Stacey says, amount of avenues now that didn't exist before. Just a few years ago was just Golden Seeds. And the number still doesn't move, right? It's still at 2%, which is back to my point about the systemic problem. But go ahead.
But Nisa, maybe also, forgive me for jumping. But maybe, remember, we're always asking for traction. We're always saying, what did you do? And for a lot of these women, their time is now, but this might be their first endeavor. This might be their first project, and it could be a unicorn. But if they don't have a track record, then it makes it harder. So because these investing groups and these wonderful funds, I mean, my friend Linnea, Gingerbread Capital, and there's so many great ones, Shatter Fund, they're thrilled to invest in minorities and in women, but we're still business women. And so we still want to see that you've done this before. Show us an exit. Show us some previous success. So it will take a little bit of time for these women to ultimately have exits and then be able to proudly and confidently come in and say, yes, I was behind Away. I was behind Warby Parker. And that's why Angel and Seed and A are not as hard as B and later stages. Because once you get to the later stages, you're talking big money and you have to have had a pretty good track record.
That's
Right.
absolutely true, although people don't require men to have previous exits when they fund them.
Yeah.
I do.
A lot of people don't.
Yeah.
Shame.
So, Meg, I want to ask it a little bit different from you on the family office side, because family offices have been known to be more female friendly. However, most family offices don't lead. And so they're typically being pulled in, or, they're not leading around. So how do we change that from a family office perspective? Because family offices definitely are more, on impact and are definitely more female friendly, but typically aren't leading. What are you seeing from your side, and how do we kind of move that needle for family offices to maybe lead or do smaller rounds to get some of those females to their Series A?
Yeah, so my role is a little bit complicated because I think I see the both extremes, right? So I work in a heavy equipment dealer, which is
Yeah.
all men, and then I work in a family office, which is a lot of women, because I think people see it as, oh, it's a relationship management type role. So I don't know if I necessarily agree that family offices will need to step up and lead. I think, a lot of them don't have either the capital or the sophistication to start leading.
Right.
But I think, as Nisa said, it is being self-aware of how are you asking questions. Are you being preventative in your question asking? And, and are you open to a different type of entrepreneur? But one thing kind of from the last dialogue that I want to touch on too is, what Stacey and Nisa said about potentially women need to be more ready before they approach. I don't feel that at all. I think that for me, it is a deal flow problem actually from women, because there's not very many women that are focused on construction technology. And so if you are a woman and you're innovating in that space and you're not ready at all, I still want to talk to you. And I think a lot of VCs and family office need to kind of flip and have that mindset of, they may not be ready, but you need to start fostering a relationship with them and, and helping them get to know the market in which they're pushing towards.
Yeah, and I think that brings up a good point. All of you are in industries that are, typically more male dominant. Meg being in industrial and equipment, and Stacey, you come from entertainment, and I know you do investments kind of all over. And then Nisa, you're in fintech, which is typically, not as well as female dominated. We've seen a lot of the big venture money, taken away is fashion and beauty, right? So when you look at female founded companies that are outside of fashion and beauty, which is typically what, we hear about, right? Is this fashion or beauty company, has this big hurdle here. Stacey, you mentioned the $1 million deal, which I have great issue with, and not with you, Stacey, it's with an industry. But we say that there's this million, we've got a podcast coming up next week of, does early stage really exist, right? Because everybody says they're early stage, they do seed investments, they do Series A, but $1 million ARR is not early stage, right? And you can talk to 100 different people and 100 different opinions on this, right? And so I don't want to get it a little bit, but the point being is, if you look at some of these industries, like a fintech, like technology, like healthcare, things like that, where somebody has actually done it the right way, built the technology, passed an MVP, have paid customers, whatever, you're not going to have $1 million in ARR. I want to take it to you, because you're in a fintech industry where you're not going to see $1 million in ARR. So with new technology in these markets, how do you look at that? Is that $1 million ARR there for you? Or how do you look at that in progressive tech verticals like you're in, versus some of this traditional $1 million ARR?
Yeah, I mean, some of what we invest in is typical SaaS business metrics, where you can make the analogy. But of course, when you're in emerging tech, it takes a lot longer. The education component,
Yep.
The sales cycles are longer. it takes a lot longer to get to $1 million in ARR, and typically that's the Series A benchmark. If there still are series, as you point out, that's rapidly deteriorating. But I think as you pointed out, I always say beauty, food, e-commerce, retail. Those are the areas where female entrepreneurs get the most press. So the media really hasn't done enough, which is another reason that I focus on 13 entrepreneurs in my book who are in the areas of blockchain, artificial intelligence, robotics, autonomous mobility, and virtual reality, because there are so many and they're not getting enough recognition. And it's important that women can see that they can go into these fields without necessarily having a STEM degree, that they can be successful entrepreneurs in these fields, because this is the future, right? This is really important. And it's important that we have half the population represented in the technology that's building the future. So I think some of the milestones from traditional venture do go, do adjust a little bit in these areas.
Yeah, and I think it's important to find, for folks that are in those space, I think it's important to find investment companies that are investing in these progressive markets, like blockchain, like some of the other technologies, cryptocurrencies, things like that, that, you're going to have this amazing technology, you're going to have traction, but you're not going to be at $1 million in ARR. That takes out all your traditional folks that are looking for that de-risk. And so I think that, that's very important for the entrepreneur to find those type of investment companies versus one that have that requirement, and finding it out up front, so it's not kind of wasting time from that perspective.
May I just say that Golden Seeds does not really have $1 million benchmark, just so you know. I mean, I invested in a company called Multifold, that's AR. I invested in Next Shift Robotics, that was far lower revenues than that. A number of businesses, Tivic Health, which is a med tech device. I mean, they just had a working prototype. They had no sales. So that's actually not so any longer.
Okay.
We'd like to see it. So Plum Alley has that, but not Golden Seeds. And
so
a lot
let
of
me
other
ask that question then. So the $1 million ARR that you mentioned earlier, and then you just talked about multiple companies that you've invested that didn't have it. So
I'd like to see it.
So what was that differentiator that made you say, I get rid of my requirement because of this company? And you don't have to, I don't need specifics, but just tell me what made you say, I need to invest in this company that doesn't have the revenue requirement.
And one of the things that's nice, I have to say, about certain groups, angel investing groups, is instead of having to put up 6 figures, there's a minimum of, a lot of times it's 25,000 per person per deal. So it's, it makes it democratizes a little bit. Sometimes it's even 15,000. I knew nothing about robotics, but let me just tell you, I saw what she was doing. She was a kick-ass founder. It was something that was, I love the fact that it was, this, I'm from Boston, she's from Boston, this tough Boston woman in a male-dominated industry, and I just had to back her. A lot of times I do things that are very instinctual. Sometimes they honestly don't even make financial sense, but when you're at that very early stage, you are going with your gut. I mean, I always say the financials are called estimates, and estimates is a nice word for made up, because they're made up, let's be honest. So you have to go with, and that's sometimes where I think women investors actually have an edge because over their male counterparts, because the men are so focused on financials, and that's what they're trained. Look at the numbers. I look at the numbers last. That's number 14 on my list. That's always what I say when you put your deck together. I'm really looking at, can you run, is this a great idea? Is this a huge problem? Is there a huge market? Are you going to be able to fix this problem? Will your hypothesis prove out? And are you the one that's going to be able to do it? Why you? So they don't necessarily have to have an enormous amount of traction, but they have to have some type of a track record in a similar industry. And I have to feel that they are the right person for the product. And I'd like that there's IP protection, if it's in that area, or that there's some type of patent protection as well. And again, I sometimes just go with my gut. I have a company now that's actually being led by a female family office and a female fund. and Crystal McKellen is her name. I don't know if anyone knows her, but she's fantastic. And it's a company that's they just basically have not even a working prototype. It's just a prototype called Cooler Heads, and it's going to help women and men to not lose their hair during chemotherapy. So that's something. It exists right now. It's outrageously expensive. Very few people have access to it. It's going to democratize so that people can rent a portable unit and save their hair. Well, guess what? If that doesn't work out, that means more to me than writing a check to Memorial Sloan Kettering, not knowing where it's going.
Yeah.
I'm a lot prouder of that. So I just want to say that you don't necessarily have to, it's not necessarily that $1 million. Sorry, that was to make a short story long. Sorry, ladies.
But piggybacking off of that, Meg, what do you look for when you're looking at it? What are those kind of it factors to you that it needs to hit these top kind of three things for you?
Yeah, sure. So there's no metric that anyone has to meet, and they don't have to be a former entrepreneur or have any exits. That is not what we're doing. So all they have to have is an MVP that we can pilot within a dealership. So that obviously takes out a lot of people that are coming in with a PowerPoint and don't have an idea of what they're doing, but they're not told no. They're told, let's talk about how can we improve this? It's almost like giving advice as an accelerator in a way. But really all they have to have is an MVP, and then we test it within our dealership or with a customer and give feedback. And so, I think with anybody that's doing seed stage deals or even kind of pre-seed, it's mostly about the founder. And, I would love to see more women that are approaching me, but they're not. Yeah. And a lot of them are not in this industry, or I don't know about them. And so it's funny, I was just going through making our new website, and I want to make sure that we're not using language that is prohibitive and that makes people not want to work with us. And so the only minimum that we have, and that, I would want anybody to say, is that you have an MVP and it's ready to pilot and you want to test it with us. And then past that, of course, it's the intellectual property protection and are they the person to do this? But, it's really the product and the person focus at first.
And Nisa, what's your top three? What do you look for?
I agree with a lot of what Stacey said. I would just say, in addition to asking why you, it's why now. Because if you look at returns over time, a lot of the best companies were just timing. A lot of times something shifted in the market that made it the right time for this business. And if it was launched too early, it would have failed. And so I think that's really, really important. A lot of investors don't really focus on that much. And I would say, at the earliest stages, it's all about the team and grit and execution. And are they the entrepreneurs that are going to stick it out? Because it's really, really hard. So, a lot of people just go into it thinking, oh, I'm going to start a company. It's easier than ever. But those aren't necessarily the founders that make it till the finish line.
Agree. So I want to go over, and I've pulled up on my iPod here. There was an article in Inc. That just came out that's called VCs Were Wrong. And we talked a lot today about women, but we haven't touched, there's obviously a lot of issues with, minorities, right? And so Calendly, which it's a household name now. Everybody knows about Calendly in the business world, that does scheduling and calendars, things like that, was founded by a Black CEO from Nigeria. And I want to read what he talked about his journey. He said, I raided my bank account. I raided my 401k to launch Calendly in 2013. Eventually, I ran out of money and I started seeking venture capital. I had a working product. I was past an MVP. I had customers using it and paying, and everyone said no. Meanwhile, I watched other people that fit a different profile get money thrown at them for shitty ideas. Those VCs were arrogant and short-sighted, so the only thing I contributed to was race, so I had to fund it myself. So now they're $30 billion in revenue, and he's majority owner, right? So you hear stories about that kind of stuff, whether it's Black, white, Caucasian, women, whatever, all the time, right? But what I gleaned from that, and there's a full article, I'm just taking a quote out of it, but SaaS company, right? It's $10 a month a license. That's a hell of a lot of licenses to be able to raise venture capital, right? So you got 200 paying customers, your past MVP, $10 a month. That's $2,000 a month in recurring revenue, right? How many customers? But that's a technology right now that is game changing, and the fact of everybody's using it, and now they have $30 million in revenue, right? You hear that story all the time. And there's all kinds of unicorns like that that are, going up. But I hear that story as I mentor founders and accelerator programs and all things like that is, how many customers do you really need on SaaS? Because you're not going to get to $500,000 in ARR. You're not going to get to $1 million in ARR. You're not going to get from that perspective, right? And Nisa, to your point, could be timing, could be market, what's shifted. We live in this instantaneous world and scheduling, now we just don't want to schedule our calendars. You send a link, people are changing, things like that. So those companies that are getting kind of scale from a technology perspective, but it's in this lower kind of SaaS market where it takes a lot of customers to move the needle. Are you guys seeing things in the market kind of like that from a SaaS technology standpoint? Or, maybe Megan's even on the industrial side that are kind of lower, but there's lots of customers that are you looking at those things differently to try to get that next unicorn? Or is it certain types of investments that make that more interesting or not? Like how do you guys react when you hear that quote? Nick, I'll start with you.
Yeah, I mean, it's obviously unfortunate. I think that it's very, that kind of situation comes up a lot in the industries that I'm looking at because you need a ton of customers and to get buy-in from these general contractors, for example, it's a pretty bifurcated market, right? It's a lot of little tiny family office type general contractors, or it's, there's a few bigger national players. But I'm looking at the adoption in terms of number of customers often, no matter kind of what the recurring revenue is as a result of them. Because for us, it's, how many of our customers are going to adopt it and what are the issues that they're seeing early on in the adoption cycle. And so it is still a question of kind of the number, not the revenue generated. But it's hard to look at that metric, right? Because if you're looking at ARR alone, it's like, it doesn't make any sense. Yeah. It's a tiny company with a tiny market. And so what we try to do is just address, well, what's the actual size of the market? And when you get into the bigger players, then what kind of revenue can you get from those? And a lot of times it's at these early stages, it's an issue of they're not charging enough at that stage. And so you kind of think about, well, what's the ARR from that customer when they're at scale? And so, yeah, I mean, I try to keep an open mind on that for sure, because it's just a very bifurcated market right now. And the only ones that are adopting are really the forward-thinking GCs and dealers.
And Nisa, as you hear that quote and you think about it kind of with maybe a fintech or, some type of spin that way for someone that's doing things with, smaller banks or credit unions or things like that in smaller scale. Does that quote, resonate with you? Or the question I also have with you, a lot of times when you have the rejection like that, then you go back and you start becoming very lean, right? To stretch that money. And a lot of times, as difficult as it can be, it kind of, ends up better in the long run. How do you feel about that thought statement? What do you think about that?
I agree. I think it is better in the long run not to overraise or have too much capital. It just makes you much more efficient. In the Calendly example, to me, that seemed really like a change in consumer behavior. So it's not really a true SaaS business. It did not, it was really being used by individuals who work within companies. It wasn't like a corporate account. So I wouldn't really apply traditional SaaS metrics to that. I would have looked at that probably and said, B2C, huge potential market. And consumer behavior changing, and this is probably the right time. But you brought up a really good point about race, which I could have written a whole other book on, frankly, because the numbers are just so much lower. And it's, that's unfortunate. That happened because all of those investors basically missed out on that opportunity. Just back to the point of, having that bias lens on. So.
Yeah.
But it's nice to know there's some companies now, and I'm thrilled to say, like these guys over at Harlem Capital. They were, HBS buddies, and so proud of them, what they're doing now. And they are changing the landscape, and they're investing in people that look like them. And that's how they make it happen, one investment at a time. Rashawn Williams down at MVP, Manhattan Venture Partners, which is actually in Atlanta, not Manhattan. But again, these are African Americans that are writing significant checks to other African Americans.
Yeah, that's awesome. Well, in closing up the show, we always ask what's keeping you up at night. And so I'm going to go around the table, and I always preface this by kids, partners, husbands, everything. Take that out of it because that keeps everybody up at night. But related to the topic of this or business in general, what keeps you up at night? Just 2 quick answers. Stacey, we'll start with you.
If you can't tell, I'm very emotional. And so I love everything. I have a very hard time saying no. And so my biggest problem is my gut wrong? Am I listening to my gut too much? Am I saying yes to something that I shouldn't? Am I being fiscally irresponsible because I'm being emotional? I guess that was my number 1. And my number 2 is that hoping that businesses that are really worthy, because I'm trying to really narrow my thesis to things that I'm going to be proud of. Yeah. And that if they don't work out, I gave it their best shot, and I did the best I could. So, are they going to come to fruition because I feel so passionate about them?
That's great. Nisa, you?
So I guess what keeps me up at night is the fact that this isn't changing, and that I wanted it to not be the same as traditional tech in emerging tech, that we wouldn't have to go back and fix the problem like we're trying to do now, and that it would be a more even playing field. And I guess just based on the conferences that I attend or speak at, it's still predominantly men, all male panels. And so it's about getting the media, second point, on our side. I just posted something on LinkedIn that went viral, which was, I think this was in response to Forbes innovators list that was published last month, where they, out of 100 people, put in 1 woman as an afterthought, top innovators. That all the other publications like Inc. and Entrepreneur, et cetera, had women on their covers. And I posted a photo of that all collectively, because I think it's about time the media was on our side.
Yep. No, that's great. And Meg, what are your 2?
Yeah, I think my top is definitely just the failure rate that's inherent in venture. I came from middle market, and you have a little bit more downside protection there. And so, as I'm making these investment recommendations, of course, I'm always thinking about, most of these are going to fail, and which ones is it going to be? And then the other one, which I think is kind of just an oxymoron for, being on the show and getting to contribute, is a little bit of imposter syndrome. And it's, am I the right person to do this? And kind of, will I be able to outperform other people that are playing in this market? And just wanting to keep up and prove, a woman can do this and be in the heavy equipment space and perform well.
Well, awesome. Well, ladies, it has been a pleasure to have you all on the show. Feel free to click in the show notes and follow any of these great ladies in their journey and the way that they're paving the path forward for not only female founders, but they're also paving the way in other innovative areas and male-dominated areas. So I want to thank you all for being on the show. Feel free to follow any of these ladies' amazing journey. This concludes the show. Feel free to subscribe to get your weekly shows in your inbox. If you have any comments and or questions for these ladies, feel free to submit those and we will get you the answers. I want to thank you all again so much for being on the show. It has been a great debate, a woman power, a great conversation today with difference of opinions, and I love that when we all can come together and provide different sides of the coin. So a bunch of player women on are not afraid to have opinions. I love it. Thank you all so much for being on the show, and really appreciate you being on.
Thanks for organizing.
Thanks for having us.
Thank you.
This podcast has come to a close. To hear more from the Executive Innovation Show podcast, subscribe, submit questions, and share the love. Follow us on social. We're everywhere.